Good afternoon from Los Angeles and happy Tuesday. It's Alyssa Corman, Justin Nielsen here with a look at the stock market today. It is Tuesday, March 5th, and on today's show, we're going to be looking at Ciena following up on that post-earnings move. Pretty ugly there.
A lot of movement.
A lot of movement.
Right.
Also taking a look at C-Trip and Target. But first, let's check in with the major indexes. We sort of limped into the close here. It was looking like the Nasdaq would close up about 0.3%.
It was trying. It was trying.
It was trying, but now we did close about flat for the Nasdaq and the Dow, just a smidge lower. The S&P 500 finished the day about 0.1% lower, and we're still seeing those resistance levels in play.
Yeah, which, I mean, that's okay. It's one of those things where when you go up that much, and this is something we've been saying for a while here, when you go up that much, it's okay for the stocks to take a break and the indexes to take a break. So there's nothing really surprising here. Of course, you have the China news and, trade, what's going to happen there. That's been kind of acting as a damper on things. Now that things are looking more positive, some people are saying, well, is that baked in now? So there's a lot of, there's always a wall of worry as you climb up, but there's not major distribution here. We saw a distribution on the Nasdaq yesterday, but there's not a lot of distribution at this point. And you can see that the S&P 500 is hitting that 2,800 level. So we were talking about the 7,500 level for the Nasdaq and the 200-day moving average. Now for the S&P 500, it's that 2,800 level.
Right.
So now we just see, can it break above that?
Yeah.
And today the action was really kind of flat. It was back and forth,
Yes.
and we might see that going for a few days, and that's not unusual.
Yeah, and almost for the Nasdaq, it looks like 7,600 now.
Yeah, right. Yeah, around 75, 75.
Yeah.
It's just below 7,600. Sure.
Okay. Well, let's take a look at Ciena. A pretty ugly session for the fiber optic stock, finishing the day down about 5%.
Right.
Massive volume here, gapped up.
That's not how it started.
Right.
Yeah.
So very different picture from the beginning of the day to the end of the day. This is an earnings move. Earlier, it had broken out of an ascending base, one of the rare patterns that we've seen, held up through the correction that we saw at the end of last year. But even with all of that and the outstanding numbers that it turned in its quarterly report, you have to be cautious of these reversals.
Well, and whenever you see something going on with a stock, we call it like an expectation breaker. You see something that is like, oh, this is weird. This is not acting right. You have to react. And for as much as you might love the stock, and we did, we had this on leaderboard. We took it off today. I actually bought this because I was talking so much about it. I'm like, you know what, I want to own it, so I stopped talking about it and actually own the stock.
Here.
Right, exactly. I did own the stock, but I bought it out of that ascending base, and if you bought it at 40.26, what you saw was a 10% move and then a complete retracement of that entire move. Whenever you see that, that's one of our sell signals. When you make a move that much and then you come back down, that's a sell signal right there.
And it happened pretty early in the session, though, so that's at least one thing I know a lot of times it's good to get in there right at the open, but this did happen a little bit early if you were watching an intraday chart to catch it as it's coming down.
We've been talking about the first 5 minutes. The first 5 minute bar on this looked horrible. It was not a great first 5 minute bar. The second one looked even worse, and it just kept on getting worse from there. So if this was something you didn't own and you were trying to use this as an opportunity to buy it, the opportunity just wasn't there. The 5 minute bars looked horrible, and it continued to get really ugly very, very early, as you said.
Right. So, if you did try the strategy, buying this on the gap up, and clearly now's the time to...
Well, you shouldn't if you were following our rules, because the 5 minute bar.
But if you did, clearly a sell signal here. But what if you bought one of the earlier breakouts when we added this to leaderboard several months ago?
That gets a little tricky, and that's why we were actually having this debate among the leaderboard team today. Is this something that deserves to be sold? Because, okay, maybe it's coming down to the 20-day, the 21-day, getting support there. But, what we decided was, we have a good profit on this. Let's just take the profit. There's nothing wrong with that. And with the indexes kind of taking a little break here, sometimes taking that profit into that break can really help you out, because if things do get worse, you've already lightened up a little bit. If things kind of improve from here, then there's a number of stocks that are setting up. You have new opportunities.
Right, exactly.
And the outside day was especially something that we didn't like. So an outside day is when you're closing, when the high is above the previous day's high and the low is below the previous day's low. And so all that price discovery, it just makes the chart look a little broken.
That's right. The bearish action there, definitely pretty glaring.
Yeah.
So, but we'll keep an eye on it.
Sure.
But for now, out of China and the China internet space, we're taking a look at C-Trip. Those shares finished the day up almost 20% in heavy volume. So on the face of it, looks like a pretty good move here out of the China space. This is an earnings move. We've seen a lot of nice earnings moves, but taking a step back and looking at the full picture here, this gap up was just now putting the stock above its 200-day line. It's been in a pretty long downtrend. Yeah,
so that's one of the things. I often will do a screen on the market and look at what's up the most today. And this was one of the ones that was up the most. And so it was something that got my attention. But then the first thing I looked at was, look at that dismal relative strength line. It's the relative strength rating is 34. The relative strength line is just absolutely dismal. As you mentioned, it did bounce off of its 50-day moving average, got above there, and now it's above the 200-day, but there's no discernible base here. So this is not something I'm going to really try and play long term, because as much as it's great that China stuff is working, Shanghai Composite has been doing well lately. We're not bottom fishers. We're not trying to buy things off the bottom. Right.
There's a reason why we look at stocks that are breaking out of proper bases, already in uptrends with the 50-day line above the 200-day line in most cases here. So putting it into perspective of some of the China moves, YY, another big mover today, you definitely want to be careful about bottom fishing, as you mentioned.
Absolutely. And you have to also be careful when you start seeing the indexes pause, and then it's the bottom fishing stocks that start doing well. Okay, well, that's telling you that's not necessarily a huge amount of strength. So you have to just be aware of what's working right now.
That's right. And we're also seeing somewhat similar action today among retail names. The retail sector had a lot of industry groups at or near the top performers today. We have big earnings moves from Target, Kohl's, a big move today. But again, putting it into perspective of the actual technical performance and the history of what we've been seeing with these names, holding in bases, kind of, but pretty sloppy.
Yeah, a lot of sloppiness there. I think that's the best way to say it, and that's not how you want to really describe a chart. You want to have those tighter action. You don't want this wide and loose action. So here we have Target. It's still below its 200-day. For as big as that move was, it's still below the 200-day, and so that's something that we're generally not looking at stocks that are below their 200-day. We can start considering them if they start basing above the 200-day, but I'll tell you, in the entire time that I was working with Bill O'Neill, I don't think I ever saw him buy a single stock below the 200-day. Ever.
Well, that tells you something.
Yeah, and there's a reason for that.
Exactly. So when we're looking at the sector as a whole and its performance, again, outperformance today, but you don't want to take one day in isolation.
Right, exactly. Again, and maybe there's some sector rotation. That's absolutely critical to be aware of. If there's something going on in the industry, you want to be catching that as early as possible. And as you mentioned, I think out of the top 10 or 12 groups, 4 of them were retail. One of them being the department stores, discount chains. They were all up there. But again, you have to let it you got to let those bases form. Right. If the bases aren't forming, then you just have to wait.
Yeah, and we've seen through history your odds of success improve.
It's all about
when you're buying those breakouts. So we want the odds in our favor.
Absolutely, absolutely.
And we are going to be getting results from BJ's Wholesale, also in the retail space, in a discount group. Yep. About a 2.6% move today. This chart, how's this one looking compared with your Targets and your Kohl's?
Well, at least, this is above the 50-day. This is actually an IPO, so there's something kind of exciting about IPOs. We like IPOs. This is going to be really one of the first bases that this stock has formed. Now, I'm not as aware of BJ's because I live on the West Coast and this is more of an East Coast thing. You know, I know Costco. I go to Costco.
Yeah.
And Costco is the big gorilla in the room here. They've got 93 million subscribers, or members, I should say, versus, you know, BJ's around 5 million or something. So it's an order of magnitude different.
Right.
But, you know, you always want to be aware of these IPOs, these newer names that are getting into the space. And this is one of the stronger looking retail stocks out there. So it's worth taking a look at.
All right. So if we do get a breakout over that 27 level on earnings, you know, would that be considered maybe an aggressive entry?
It's, you know, first of all, I take a step back and say, okay, is this the strongest stock out there in the strongest industry? Now, the industry did great today, but it's not right now one of the strongest industries. So that's my first hesitation. But, you know, if it's something that you know the stock, you know the company,
the story.
Maybe you know the story a little bit better. That might give you a little bit more conviction. I don't know enough about it right now. Just based on the chart, it looks interesting. It's something I'd probably put on my radar, but I don't know. It would have to be pretty compelling action tomorrow, and you know, some blowout numbers for me to really say, oh, this is something I really want to be watching. So that's before the open tomorrow. Right.
So strength out of retail today, but we definitely want to just, you know, keep our eyes on this space for now.
Absolutely.
Okay, everyone. Thank you for joining us today. And be sure you're heading to investors.com for all the latest stock news and analysis, and that you're checking out our content across social media from Facebook to Instagram to YouTube and Twitter. So follow and subscribe to stay up to date with all the latest. Thanks for joining us, and we'll see you right back here tomorrow.